really glad to be part of this discussion today. Both Kapish and I were kind of discussing. I think this can be a really good one because I think most of you are either starting in the early phases of your journey or sort of in a scale mode. In which either case, I think ONDC could sort of be helpful, right? So we'll give you a quick sense of what ONDC is all about. A quick brief. I joined here like 4 months back. And sort of focused on building financial services product here. Prior to this, I was with Mind Labs into payments and lending, right? Point of sale lending. So that's sort of my background: payments, most recently lending, and then try to value products, right? So Kapish, maybe you want to introduce, and then we can get started.
Oh, sure. So hi everyone. So I joined ONDC recently, like 2 months now. One decade-long experience all in the financial services space. Started off in investment banking, did that for 2 years, then did consulting for 4 years, and then last 4-5 years have been with fintech startups, with one digital lending company, one business correspondent, and one payments company. So all in all financial services, and now hoping to, protocolize entire lending stage for us and make life easier for both platforms and lenders here at ONDC.
How many people have heard about ONDC, have already started working with ONDC or reading about it? You, okay, 1, 2, 3, good. I think that's good, yeah. You have so many beta users here.
Yeah. So there's a weekly call as well, and I think the folks who are interested, we can sort of share separate, links for those weekly calls. We can first cover it. What do you want to cover? Right?
Yeah. So like intro to ONDC first, and then financial.
Yeah, we can do that and then take questions.
So ONDC essentially, right, what we're trying to do is unbundle the present e-commerce journey that we'll all be very familiar with. So let's say, how does e-commerce happen today, right? So if I'm looking something, I'll go to a platform, I'll put in my query that is something I look, the catalog will come up, I'll go through the outcomes, choose one. And then, I'll be landed to add that to my cart, do a checkout, provide my payment instructions. And eventually that delivery will be coming to my house or whatever location I specified. And even if there, then I go back and the post issue is handling. So all these activities, right? Search, discovery, payments, fulfillment, logistics, post payment, post delivery support is being done by one party today. That's the model that we are all familiar with, and most of us would have transacted as well. What we at ONDC are trying to do is unbundle these 5-6 things that one platform is doing today. So in our parlance, there's something called as a buyer app, right, which only does search, discovery, and is basically handling the user experience side of things. There is a seller app whose main job is to onboard sellers on the network, right? Get the people educated how to sell online, how to get their catalog online, how to make sure that the catalog is updated with the right inventory and updated inventory. And there is a logistics leg, which is whose purpose is to basically deliver the job or whatever item from one warehouse to the location. So if you happen to go to your Paytm app today, so Paytm is one of the live buyer apps. You will go scroll down, there will be a section called Paytm's ONDC network. And so Paytm is acting as the buyer app where basically they are kind of handling the user experience. And there's another entity on the other side, which is Magic Pin, which is the seller app. So what Magic Pin has done is they've onboarded restaurants. So something like McDonald's, Wow Moves, right? A lot of hyper-local restaurants have been onboarded by Magic Pin. So now as a user, I go to the Paytm app, let's say just choose Momos. It shows me all the inventory that is done on the other side. I choose from, let's say, Wow Momos, and I'll make the payment on the Paytm app itself, right? And eventually the order goes to Wow Momos, and the delivery will be done by like a Dunzo or a Shiprocket or a Shadowfax. So what one platform was doing, all those 5-6 things, has now been divided into 3 entities: Paytm, Magic Pin, as well as the logistics company, right? And Magic Pin is onboarding the sellers. Now that's what we are doing, unbundling and making them interoperable. Now, why are we doing that? Why? What makes sense? So from a seller standpoint, right? If you look at, if they are working with one platform, the first thing is they have to abide by that platform's terms and conditions, right? Whatever the return policies, what the payment policies is, everything. There is no other option but to agree to that. In the ONDC network, they can actually work on their own terms and conditions. They can say that, okay, I want only these many return days, or I will not accept cash on delivery orders, and so on and so forth. So they can set those conditions for themselves. And these are the terms and conditions that we're willing to match in order to fulfill an order. Secondly, what happens is if a seller is on a particular platform, right, if they migrate to another platform, right, their entire reputation history also goes away, because on a new platform, they have to start from scratch. So let's say I am a restaurant selling on Zomato. For some reason, I've had some issues with Zomato, right? My commissions have not come or something like that. If I have to go to Swiggy, my Zomato history doesn't go with me, right? Because all the ratings and reviews that I've garnered all goes away. Whereas on the network, if you're not satisfied with Magic Pin, you can go with a Bitsilla or someone else. So I was just relating to the benefits that a seller has, right, in terms of this. And I think largest benefit is in terms of commissions, right? So the platforms, the amount of commissions that they charge, which ranges somewhere between 20 to 30% on the network, that is right in low single digits after they've paid what the seller app is taking, what the buyer app is taking, and the logistics is obviously paid by the customer. So that's what the benefit of a seller has, like when they come on the ONDC network as compared to going to a platform. And for the buyer side, it is obviously lower prices because once the commission has gone down, that can subsequently come down on prices, as there is a wider assortment range. Because as a network, as a government-backed, not for profit kind of thing, we are actually going in a lot of tier 3, tier 4, tier 5 cities to help educate sellers to come and sell for the first time online. So the assortment and some of the products that might be available from different platforms today. So that's the reason what ONDC is, what we are trying to do in the broader context. Any questions here till now, and then we'll spend like 2-3 minutes on financial services.
Yeah, I have one. Like, are you going to cap the commissions as like ONDC? Are you going to cap, let's say that a buyer app or a seller app can take only 5%, 4% or something?
We're not going to cap the commissions, but imagine a steady state, right, where there are 10 buyer apps, right, for a particular category. Then it's not possible for one to charge more than what the market is. So let's say if you're going to a physical shop, right? Let's say that if you go to a particular market, like in Delhi, there'll be a Lajpat Nagar market or Chandni Chowk market, there are 5 stores that are selling jeans, right? Their pricing, and if they're selling the same brand, same quality, pricing cannot be as far as each other, right? Because they will be outpriced if there are 5 shops in the market. So in a steady state, when there are 10, 15, 20 buyer apps for a particular, say, food delivery or a grocery, if anyone is charging out of whack commissions, as it is, the sellers will not accept it because you have another buyer application, which is so that what that commission is actually going to be defined in the market itself.
Yeah. And I'd just like to add, the way this is executed on the protocol is based on, let's say, a parameter in the API, which is, let's say, a buyer finder fee. So a buyer application will have a buyer finder fee, which they'll broadcast. As a seller, if I share my catalog, otherwise I do not, right? Now, so this contract essentially happens at the transaction level. So I think from an efficiency perspective, there's a lot more market efficient mechanism to discover price. And as Kapish said, it will stabilize to a point which reflects the actual price that's acceptable by the market as well, right? Over.
One more thing you were mentioning, like I think as a seller, I can tell that I would work on these days, I will not work on these days, or let's say, something like that. I'm able to set all that on the app itself today.
Yeah. So when you're onboarding, right, when the seller app is onboarding these sellers, so they have these conditions. So let's say there might be certain pin codes that I could do the delivery myself. Let's say if I have a hyper local store, which I know, we say, look, in this pin code, I can do the delivery. But for all the other pin codes, I need a Dunzo or a ship rocket to do delivery. I don't want to accept cash on delivery for certain locations. I don't want to accept. So those, when they're getting onboarded, right, they can point out to these conditions. So whenever a search like that gets broadcasted on the other side, only relevant searches will be shown to them.
Is this built on a blockchain where this is like more an immutable data set that you guys are storing, or is it?
No, this is not on blockchain. This is okay.
Very simple gateway.
Got it. Okay.
So basically, these are, what ONDC builds essentially 2 things, right? One, a registry, which is, think of it like a digital yellow pages there, right? You have a database of buyers and sellers, and each of them having a kind of a unique key associated, and whether or not they're live on the network. So that's the registry that ONDC holds. Right. And then what ONDC defines are protocols, which are actually the APIs of which are actually built by individual players in the market, platforms in the market there, right? So it's not a switch model, it's not a centralized model, and it's not a blockchain either there, right? We just define specifications over here.
Got it. Thank you.
So do you see that in future there would be a lot of apps built by outside ONDC network on top of ONDC?
I was thinking same, Anurag.
Yeah, I was thinking that because
sounds like right. So
yeah, so if that is the case, then a lot of innovation would happen.
No. So I was just giving an example that we already see that happening, especially in the retail environment, where a lot of focused sellers, let's say sellers focus on specific categories or geographies or like a combination of these, are onboarding merchants. there,
Okay.
right? Or sellers, essentially. So that's starting to happen already. On the buyer app side, not so much at this point in time, because in a sense, their scale matters. You already have customers, so you have a head start there, right? From a buyer app perspective there, right? And I think we do expect that over time there'll be more buyer apps that are built on ONDC, or they scale up on ONDC as well.
Yeah, and even there's a third role to play on the network, which is that of a technology service provider, which is basically helping buyer apps and seller apps come on the network. And we're seeing very young TSPs also coming in. One of them also got funded by Sequoia, right? So that's also a role, right, where a lot of entities who want to come on the network don't know how to do it, or they don't have the prioritization, the capability to do it. So there's a crop of TSPs also that keep interacting, and that's also an area where we're seeing young companies come in.
One more question. Is there a specific category that you guys are looking at, like, or their top featured categories, or is it like open for anybody to come and start selling through ONDC?
ONDC right now has domains. So one is the retail domain. Now within retail domain, you'll have your F&B, food and beverage, you'll have grocery, you have home and kitchen, right? You have electronics. There is the mobility, which is the Namayatri app, right? And that is now getting transferred to Yapati and in, I think, Kochi, and in this one, Calcutta, that's going on. There is a section of B2B, which is all business to business purchases that are happening, right? And that has a both domestic as well as an international leg to it. So we did our first international transaction this month, where a buyer from Singapore and the seller was from India. Then there's our domain, which is financial services. And within that, you have credit investment. We'll deep dive into these credit investment insurance. So those are domains right now. And within those domains, these are the categories. And I think these are there. We are always open to new use cases as long as those use cases are of scale and we can take it to an India level population.
Perfect. Thank you.
Mohit, one small question. While it's currently B2C, has anyone explored doing BNPL, buy now pay later, for the consumer side or the B2B side for the transactions on the ONDC, especially the B2B piece?
So I believe you're talking about, let's say, purchase finance, BNPL, checkout finance.
Yes, exactly.
So that's sort of planned and that's there in our roadmap. I think we'll be launching that protocols, right, for BNPL kind of a use case in the next 3 to 6 months there, right? That's pretty much there. What we've started with are slightly more, I would say, slightly easier use cases, like a purchase finance, like a personal loan use case, and then a GST-based loan, right, for sole proprietors. We started with those, but that's there at the end.
And if since couple of us are fintechs and the lending institutions, quite a few of us, if any one of us would like to engage with you for these use cases of the lending side, how can we do that?
So the different ways, like I would say, when you say engage, and obviously that's slightly broad term there, right? But let's just break it out. Let's say there is engagement while we are defining the protocol, standard protocol. So you can definitely engage as a community member over there, right? And we'll have community calls going ahead where we work with market participants, even as these protocols are defined there, right? And standardized there, right? That's sort of one phase. The other is that once these are standardized and available for anybody, you can build your commercial use cases on top of those, right? You can build a buyer side app, or you can be a lender depending upon where you are in the ecosystem there, right? Which is what is happening with our early stage market participants, who have started integrations on ONDC financial services specs as well there, right? So I think broadly these two areas, and then the third one is, as Kapish said, is more of a TSP play where you have a certain specialized technology using which you can actually help market participants get onto the network or build their journeys, right? So that's more of a technology service provider kind of a play, right? There. So these three areas.
Sure. And for the first two use cases, maybe to this group, would you be able to share the contact person detail or contact department details?
Yeah, we'll do that. I think we plan to sort of cover those aspects in our sort of financial services thing. We can certainly share those things.
Maybe we'll spend 2 minutes now on financial services, like what we're doing, and we'll tell you how to kind of engage them. So, as I mentioned, financial services is one of the domains on the network. And within that domain, there are 4 categories: credit, insurance, investments, and gift cards, right? Credit, we are starting off with personal loans and GST-based invoice loans for individuals and sole proprietors. And reason for that is just they can be digitally KYC'd. So we'll come to partnerships and private limited companies later. So that's phase 1 for us in credit. The phase 2 in credit is exactly what your question was on BNPL, which is purchase finance, right? Both for consumer and businesses. The phase 3 is something which is we call as derived data. So, right, all these platforms which are becoming a buyer app or seller app, have a lot of data with them, which lenders can most likely use for underwriting. So, how do we start to go to platform A and platform B and say, tell me data in this format, update in one form in their business rule engines. And phase 4 would be, partnerships, private limited companies. We'll also go into secured lending. How do we make secured lending happen on the protocol? And where are we with credit is we had released our specifications in early August last month, and post which we had a lot of market feedback. And now what we've done is there's we had asked for participants who would be interested in taking part as wave 1. And with those wave 1 participants, we'll do weekly tech implementation calls. There's a cohort that has been built of lenders and buyer apps, which is coordinating, and they're working together to develop it on the network and then go live. That's credit on one piece. Insurance, we are starting off with health insurance, motor insurance, and marine insurance, right? Those will be the first 3 products. We are expecting, or we are hoping at least that our specifications go out within this week for that. And the same process will follow, right? We'll release the APIs, we ask for market feedback on that, then we ask participants, okay, who is the one who's going to be the first one to go up and who's willing to commit your tech resources and bandwidth to it. And again, we have these closed door tech implementation calls with them. On investments, we'll be starting with mutual fund investments. We're actually working with an entity called MFU, which is basically set up by this Association of Mutual Fund Industries and it's owned by all the asset management companies in the country. And they've already tied up with all the asset management companies in the back end. So the idea would be to get them as a seller application. So on day 1, we have all the asset management companies, and any buyer app that is building on for an investment use case, gets the inventory on day 1. So that's how and then we'll go on for other investment use cases. But mutual funds is the first one. And then there is gift cards, which has 2 threads. One is basically we are working with these PPI issuers. We recently went live with Yes Bank and OmniCard, and they are issuing a virtual, card to corporates. So basically, if I'm a corporate, I want to give 10,000 gift cards to my employees for Diwali, right? So they can come tie up with one of these issuers, and those 10,000 gift cards get delivered virtually. And those can be used exclusively on the ONDC network, on all the buyer apps that are there on the ONDC network. So that is live. We just went live with that one, and we're going to scale that, and we'll have more other issuers also come in later on that. And the second thread in gift cards is just normal. If you want to buy a gift card of a third-party brand like a Zomato or a Ferns and Petals, and we'll facilitate those transactions. So that's also live with one Spice Money as the buyer application and the Star as the seller application. But those are the broad things that we're covering under financial services, right? We have a section on the website under the resources section. If you go to ONDC website, there's a resources section. There's a tab for financial services. So all of the BRDs, user flows, APIs, recordings, whatever you've done, large extent of that is on the website. So it's a digital public good, which is free, accessible to all. And the way you engage with us, there is a network participant profile form there. You have to fill in that network participant profile form. Tell which use case you're interested in building, like credit, insurance, investment. What are you building for? Buyer app, seller app, DSPs. And that lead kind of comes to our team. And then we will basically, basis the inputs that you've provided, we will share the requisite documents and add it to relevant calls. So that's how the engagement model works.
Hi, so we are a cross-border payments platform. So we wanted to see whether there is an opportunity in ONDC for the people, for the exporter who are sending goods abroad and to receive their payments.
Opportunity, yes, but it's very early right now. We are still figuring this thing out, very honestly.
But I think we need to do one thing: just send out the note to Ashish, right? On this one, we'll share the if you could send a mail to fs@ondc.org.
Sorry, what is the mail ID?
I'll just type it out. fs@ondc.
Put it on the chat. Yes, put it on the chat.
Okay.
Yeah.
So this is our group ID. You can send a mail, and we'll have one of us respond to you, or sort of direct you to the folks who are managing this.
There is a person who's a specialist for cross-border and B2B exports. I think this is the right person to kind of take any questions on this.
Okay. Okay, thanks a lot.
Guys, I just wanted to understand in a little bit more detail the lending use cases. So the GST-based SME lending is kind of very clear, right? Flow-based lending. But on the personal loan side, what is actually the data that's part of it, and where does kind of new to credit fall in that longer term pipeline or roadmap?
So for personal loans, there are essentially just two documents. One is the bank statement through an account aggregator, and the other is the bureau pull that the lender will do at their end. The flow that we've defined doesn't ask for any other document, right? And so any buyer app, let's say Paytm is a buyer app, right? So I go to the Paytm app, there's a section, they do a bit of journey, whatever that's required, give the consent for account aggregator, right? And the lender will then the lenders will come back with offers. And then it's up to the borrower to choose which is the best offer. And which offer they choose, they do a digital KYC. So in case of a personal and individual, it's an Aadhaar KYC. So it could be through DigiLocker or through the UDI website. Then they'll ask for a disbursement account to a penny drop and then e-natch and sign. Pretty standard journey that we will see.
But I just like to add, see, the design is such that you don't really start with the lender in mind, right? Or you don't really select a lender upfront and then discover whether or not I'm approved, right? You actually broadcast your request to really kind of what it does, it maximizes the chances of a conversion even for a new to credit customer there, right? So that's sort of part of the design there as well. KYC is invoked if it's required. So if you're a pre-existing customer of a bank, obviously they've given you an offer and you've selected them, they will not really invoke that KYC. That's all sort of part of the design. In future, we'll also be doing, as Kapish said, we'll be doing derived data, which will allow platforms to provide their data that helps underwriters underwrite that. So it could be, let's say, a Swiggy or a Zomato sharing that data, or Namayasi sharing that data for the drivers on their platform, their performance there, right? And that helps the underwriters in terms of lending. That's planned in the subsequent phases.
That is one of the problem statements. That's really, really important problem statement. Like, how do we standardize all this data that is there? So we are doing a hackathon with Google as well, and I think one of the problem statements we want to go out is exactly this, where like this data that is sitting on so many platforms, how does that come together, standardized so as to be used?
Got it. So as is the flow that you just described, essentially someone who doesn't have a score would not really find any takers, right, at this point?
Why not? Good.
When you say new to credit, you're saying new to credit will not have any takers?
As in someone without a bureau score?
No, that's up to the lenders. Right? So essentially, we are not controlling the underwriting policy of the lenders, right?
Sure, obviously, but there's no additional data coming through as of now, right? So they don't have anything to go back.
Not at this point in time. But then there are lenders who actually do significant new to credit lending. They're coming on board. That's going by account aggregator data and bureau pull.
Got it.
Like if they want a banking bureau, then it's really up to the lender to take that call in terms of things. What potentially can help is some of these ecosystem things that we're doing. So we are in talks with SIDBI and account aggregator to bring about a new credit guarantee scheme only for new to credit, right? If people are taking from that and lenders get more cover to take exposure on that. That's an ecosystem thing that we're doing.
Can we write to you on that ID with a specific use case? And
super. This is the same email ID that Mohit had.
Great. I have one more question, but I don't want to
briefing call every Thursday 12 to 1.
One more question. Yeah, please go ahead.
Sorry, no, I was just going to ask about FDs and where that sits in your investment kind of pipeline.
Okay, so I'll tell you, and I think our focus has been 0 to 1. Launching these initial use cases, launching the rails, getting market participants on board, stabilizing things, and then going live. Now, going ahead, as sort of I alluded to earlier, we plan to have community calls where we'll work with, let's say, different cohorts, like say an investment cohort, an insurance cohort, or stuff like that, where we'll actually work with the community folks over there to understand which are the use cases they want there and then build. So if FD is one of those, we'll build that. Because what it takes essentially is abstracting out a use case, building standard rails, getting everybody to agree on those rails, and then kind of getting folks to kind of, build that out. So to answer your question, not just FDs, but anything that is of relevance and importance to a wider cohort, we'll build that going in.
Mohit, I had a few questions now on the journey. Now, let's say I come as a SME, right? So what would typically my journey be like, right? Because I might have so much data, like a bureau. I want to share my account aggregator. Now, is this account aggregator first pulled and then you push it to all the lenders or on the platform? How exactly is it working? Economies of scale. Because
So, okay, so your question is, as a lender, if I have, let's say, various sources of data, including account aggregator and GST,
his question was, how does the MSME journey?
Yeah, okay. How would an MSME journey look like? Chalo, let's say I'm an MSME. I have come to Paytm, let's say, for example, and I say I want a term loan.
So let's say you want a term loan over there. Now, the use case that we have enabled at this point in time is an unsecured use case basically there, right? So as an SME, you don't have to upload your financials and asset information, all of that there, right? It's purely based on your GST filing data there, right? So the way the journey works is that you get into your buyer application, let's say Paytm. Paytm will sort of invoke a GSTN page over there. It could be an embedded page, or they could do a kind of a redirection there as well, where you will authenticate your credentials, let's say using your PAN card there, right? And then you will actually give a consent to kind of share your GST data of last 1 year, right? The time period could be defined there as well. With
So Mohit, sorry, interrupting here you. So only Paytm will be there, or there will be other lenders also there?
That's just an example. Any buyer.
So there could be 10 lenders on the platform. So to whom you are going to share the data of Suchir?
So there is basically in the first step, essentially there is a search call where the buyer application discovers who all are actually doing that particular type of a loan, right? So in this case, an MSME loan, right? So they'll first discover whether as a lender, I'm doing MSME loan or not, unsecured MSME loan or not. Whosoever responds back that, yes, I am doing that MSME loan over there, gets that request there.
So 5 lenders might be interested, and then Suchir's data will be shared with 5 different lenders, right?
Right.
So, and all those 5 would like to pull Suchir's CIBIL probably.
Yeah.
Like so there will be five inquiries in Suchir's CIBIL.
That'll be a soft pull. That doesn't impact your data, bureau score.
But do he need to give consent to all those 5 differently, or it will automatically happen to?
So one consent on the buyer app will actually suffice to kind of for multiple lenders to do a soft pull there.
Okay.
जैसे आपने GST का बोला, let's say like Suchir gives his consent for GST. Now who is going to pay for that pull? Is it like every lender? If there are 5 lenders, तो वो 5 बार GST का payment होगा? या is it the buyer app which will, let's say, pay for it once and broadcast it to all the lenders?
The GST pull, you're saying from the GST portal, who will pay for pulling that data from the GST portal there? Suchir, if I'm getting your question right?
Yes, GST का data pull करना होगा. So 5 lenders GST का data pull करेंगे या 5 lenders CIBIL check करेंगे. So I have one concern over here, that one thing is that getting my data shared with 5 lenders is something, I might be not comfortable, right? Because if ONDC is asking me consent to share it to Paytm, or probably specific to a particular lender, ICICI Bank or SBI, then I can give lender by lender consent, right? But I mean, how this go in line with new digital lending guidelines, like where, you need to give consent for each and everything.
This is specifically for GST, you're saying, because in account aggregator, you
anything in lending, we need to get consent for.
So if there's a bank account details that you're sharing, in fact, on account aggregator, now you have GST data as well. So it just requires you to integrate with account aggregator, right? There is a specific consent mechanism where each lender creates a consent handle, and the buyer app actually consolidates these consent handles at their end. Now they actually invoke a page. It could be a redirection mechanism on an account aggregator web page itself, where as a buyer, I need to kind of approve lenders I'm okay to share data with, right? So that's sort of there. It just works with one OTP. So you don't have to do multiple OTPs there. It just works with one OTP. Once that is done, that is when the lenders essentially can pull out data from that particular source. So that's sort of part of the design. And it's also compliant with the new DIPA guidelines as well, there, right? Digital data protection guidelines as well, right? So that's going to be part of the policy. So you can't expect that there are folks who are just extracting data, not giving any offers, and then running a call center farm there, right? So I know some of those concerns are there, right, as well. But then that's going to be part of the design and the policy itself there.
So follow-up question to what Abhishek is asking actually on similar lines, that now essentially if let's say credit report is pulled, or if it's a GST report that is being pulled, if we look at the account aggregator, who is the FIU over here? Who is providing the FIU code? Are those the lenders, or does ONDC have their own FIU code to be able to pull data from account aggregator?
No, the lenders are pulling the data, right? So lender is the user of that. Okay. So the lender has to give the consent.
So now confusion is coming in. So essentially, let's say if there are 5 lenders, all of them are integrated with, let's say, one account aggregator. For hypothetical purposes, let's say it's one money or FinView.
Yeah.
In that case, they will all provide their FIU code to FinView. And the consent, when it is given to the user, in the account aggregator ecosystem, it clearly mentions which is that NBFC or that regulated entity who is pulling this data. So if I am the person who is the borrower, in that case, technically I will be sort of, being made aware that, okay, Paytm is the lender. For that, I will get a separate OTP. When the data has to be shared with, let's say, IndusInd Bank, for that, I will get a separate OTP. So in that way, the flow that you are describing, where there is only one consent which covers them all, is it like a aggregated consent which mentions all the lenders on your platform? Then how exactly does this data flow work?
So I think there are two separate things. Let's segregate OTP and consent here, right? Now the consent handle is created by each and every lender. There is a unique consent handle that gets created, right, in real time there. This consent handle is passed over by the lenders, individual lenders on a, I don't want to get into API details. We can do a separate call for that, right? Via ONDC protocol itself. These consent handles are, provided by the lenders to the buyer applications. The buyer application then consolidates all these consents and passes these consent handles to the account aggregator via redirection flow, right? Now, the customer sees all the lenders where consent handles have been created on a user on a screen there, right? If there are 10 lenders, they'll see all 10, and they will select out of those how many of those he wants to share a consent. He selects that explicitly. Then there is one OTP verification over there, right? And that's it's a verification. I would not call it a consent. It's a verification there, customer verification there, right? And then once that is done, those lenders where the customer has explicitly approved the consent are the ones who are able to kind of get the data from the FIUs.
Okay, so is this like a specific flow just for ONDC? Because this is not a flow that we have been able to find with any account aggregator when we are trying to enable credits for the regulated entities through that. Like, is this something very specific to ONDC, this consent flow that you're describing?
Not really. If you talk to any of those,
it's not specific to ONDC. Like, within this construct, account aggregators, the Sehmati is enabling this for us. But it's not for us only. It will be for any platform which will do it. So this is one conversation that we've had with them that we want to make it.
Yeah. We'll follow up this later on the email then.
Send us a mail.
This is a valid question. So before this protocol went live, right? We had discussions with Bureau, we had discussions with Sehmati, we had discussions with NPCI, right? Like, how will this work out? So this soft pull was suggested by Bureau. It was the same question, right? If 10 lenders will pull, the inquiries will happen, your score will go down. And hence the soft pull concept will say, generated that, okay, you do a soft pull without OTPs, that happens. The same thing as Sehmati, when we told them, Sehmati said, we'll create this consent handle. So because it will happen, right? As a lender, one lender might want 3 months bank statement. The other lender might want 6 months bank statement. Third one might 12 months bank statement, right? So everyone has to create unique, but you can't keep going to the borrower each time and getting these things. So then the idea was, okay, let all these lenders present these consent in one form, right? And then the buyer can choose, the borrower can see, okay, this lender is asking this and this. They can choose which one to give to in just form of tick or a cross, right? If I want to give, I mark a tick. If I don't want to, don't mark a tick. And then one OTP does that verification. So that's how Sehmati came up and said, okay, this is how we are going to solve this problem. Because at the end of the day, both Sehmati and Bureau are interested to make this happen.
And Mohit, just a step further to it. So let's say, so once this process done, then I might be having 5 sanction letters or maybe 5 term sheet in my hand, and I can choose any one. Is that the case?
Yes. You'll have 5 offers. Yeah. 5 offers. You select the offer basis the key fact statement information available over there. That's when the lender actually does a KYC, and if the KYC happens successfully, that's when you get your the loan application successful.
But you'll see 5 offers. Yeah. 5 offers are being made by lenders.
And for this entire process, the buyer will stay on the ONDC platform only. That's the one app.
But even the buyer app, there is no buyer app. There is no ONDC app as such.
Yeah.
So there is no ONDC app.
So how an individual interact with ONDC then? And let's say if I
need not.
So let's say Paytm is today a buyer app, right? So the entire journey can happen on Paytm. Ola is the buyer app. It can happen on Ola. No broker is the buyer app.
Yeah.
Understood. Okay.
It's like it's like SMTP, right? And we talk about, let's say, email communication. You don't even know it's there in the backend.
In this, Mohit, I was just thinking about it slightly. Let's say now every lender is doing the account aggregator, every lender is doing the bureau. Why doesn't the buyer app itself, let's say, pull all this data and then broadcast it? It will help to reduce the cost of underwriting, right? Because then let's say if 10 people are giving the offer, you can divide that cost by 10. वरना इसमें तो क्या होगा, bureau पैसा बना रहा है, bank, account aggregator पैसा बना रहा है, and we're not really reducing the cost of underwriting, whereas we can reduce it here.
No, still. So 2-3 things, right? One is the regulation is all going in the direction where more and more power is going to the regulated entity, right? If you look at all the DLG guidelines and everything is being made possible. Secondly, if an individual platform also goes and talks to a bureau, right, they're not going to get very good commercials. It's only like bigger players which has a lot of data where they're able to push in something, but a normal platform will not be able to do that. Whereas a lender with much more volumes might be able to get much better commercials, right? If they go there. So 2 points to it, like the way regulations are going, it's going in more in favor of regulated entities, they being in control of it. So that's why our protocol is also forward looking, because that's the way we also want to go, which is in line with the regulations.
Okay.
And secondly, for the cost part, it's only for the few players, right, which are able to negotiate with the bureaus and get lower cost per ping that happens.
Yeah. Also, I think as a buyer app, I mean, let's say if you're in aggregate, you can't really get the financial data from account aggregator. You need to be a regulated entity to get that customer financial data.
Okay. Yeah, but again, like account aggregator is anyways a blind pipe, right? So he can probably collect it and send it out. But anyways, yeah. Okay, I think I see one question for invoice discounting. Is this currently possible? Have you thought about how invoice discounting will be done on ONDC?
So that's the use case. I believe you are working on that. Yeah, right? Kapish is working on that.
Like the one that we are starting our GST-based invoice, there is no recourse to the buyer in that case. It's a safe one. We are in having discussion with all the 3 trades platforms, right? Because trades already does invoice discounting and they're doing it at a reasonably successful scale. And their challenge also is like, we are financing only the MSPs of big corporates today, right? So how do we get it to the lower level? So it is still where we are talking with them, because they already have aggregated, supply. They are a regulated entity by RBI, so RBI wants that to happen. So the way we are thinking about it is like, if we are able to build a flow and make them as a seller app, right? And they already have lenders, time behind it, then that invoice discounting flow can come on these buyer apps. So it's still work in progress. How we are, but it's there in our. We are thinking, how do we leverage trades and then make this happen?
Neeraj, does it answer? Oh yeah, please go ahead. Yeah.
So the one more concern with the MSMEs is it is not like a normal civil kind of a structure which happens. For MSME, you need to do commercial civil. Commercial civil again comes with a higher cost. And beside of that, if I talk about invoice discounting, again, it is a very challenge for lower MSMEs or SMEs.
Yeah.
Because in TREDx, obviously, you get invoice discounting where the companies have their own ratings, or the investor will come in who have their own ratings. Again, non-rating invoices to do invoice financing is again a very challenge. So that's where we normally come in as an invoice discounting platform, where we come and we give MSMEs a platform where they can come down. Depending upon their credit analysis, we finalize what type of invoice discounting they can do.
Yeah.
Same way, we are expecting how ONDC will be coming up. Like, for example, OKN is coming on the lending side. Same way how ONDC is coming for these MSMEs. Or is there any chance where we as in startups can come down and work?
Yeah, so I think 2-3 things, right? So you're absolutely right. Trades in the existing are serving only the MSMEs, the large corporates.
Yes.
Right. And the mandate that is RBI is also giving them is, how do you go down to the lower level MSME, right? Where MSME is selling to another MSME, let's say, right? Or they're selling it to a low corporate. And that's where essentially that was the genesis of their corporate, conversation with us. Like, and trades basically, and where we said is like, we have a lot of MSMEs that might be on an India Mart, right? That might be on a Paytm. So why can't the journey start there? Let's say, right? And if I'm an MSME, let's say I'm a buyer on MSME, I can say these are my invoices which I'm looking. I'm describing the reverse factoring use case right now, right? And let's say they do that journey on India Mart, get the profile created on M1 Exchange or Invoice Mart. But once the approval comes for the seller, right, via our registry, we give it to that app, on that app buyer application that the seller is deciding on. So maybe let's say Paytm, they accept it and they create the profiles and it goes there. So it is something that is the mandate of these trades organizations also, that how do we go from those MSMEs to large corporates to come to smaller MSMEs. So that's initiative number 1 that we are thinking, and we are still in the designing phase of that. That is there. How do we go to how do we go to the lower MSMEs, right? So once we do these GST-based invoice loans, that is another track. And even though if they don't have GST numbers, right, which a large chunk of MSMEs don't, But if they have good account aggregator information, the lenders can still choose to make an offer based on their banking data, right? And then the third thing which happens is because of that credit guarantee scheme that I was mentioning, right? Where a new to credit MSME comes in, then there is the additional cover for the lenders, right? To take a risk on those kind of borrowers.
But again, if we talk about MSMEs, obviously it is more lending. But same way when we talk about invoice discounting, it is not lending. It is more like kind of a alternative funding which we can give a MSME to sustain without lending, or as in working capital, they can avail those particular cashless kind of a utility where you can use for your fund generation. Okay, but for every invoice discounting is more on a marketplace kind of a structure. So now a lender doesn't do direct invoice financing of any of the entities or any of the MSMEs. They normally follow a marketplace kind of a structure. Even on TreadX or something, you can check, but normally it is more on bidding. Yeah, more on bidding and a marketplace kind of a structure. There is no one-to-one kind of invoice discounting which normally happens between a MSME and a lender.
Yeah.
So that's where we come in, and we normally what we are trying to do is we try to build a credit line for these MSMEs on their whole underwriting of their credits, and we set up a credit line for them. And depending upon their transactions, we do a discounting on their invoices. Because you cannot do invoice discounting on every transactions or every invoices, because nobody will come and do single invoices lending.
No, but that's the why would let's say if I have 10 invoices, all of them have come through GST, right? I'm just taking the GST flow, right? I pass on those 10 invoices.
Then again, it will go on a better model kind of a structure. No? So right now it is more like better model rather than a lender.
So let's say 10 lenders come back with an offer, whether and let's say in our construct it's not a bidder model, right? 10 lenders are making offers on that invoices, and the borrower is choosing. Trades has the bidder model. But if they have offer for each invoice, because that's what we're thinking, right? And the reason we don't want to give a credit line also is because it ties up the borrower for longer duration, right? You give 1 year credit line, but what if they can do 30 days, 60, 40
as an MSME, I have to wait for my invoice to get discounted. That's the same challenge as it is at present. Like for example, if I have an invoice and I go to a lender and say, discount me this particular invoice, it takes longer period of time because you need to do underwriting every transactions.
But in our
and again, you will seek for those invoices which are like AAA ratings or rating kind of invoices.
So I'll give you just the pilot implementation of Gem Sahay that was done, right? Which was invoices of the Gem platform.
Again, in Gem, obviously, there is again
so it has to start somewhere and has to trickle down, right? You have to start at somewhere and make it digitized. The example of like in Gem Sahay, the disbursement from end to end was happening in 10 minutes, right? And for ticket sizes, the lowest ticket size that was done was 160 rupees.
Because in Gem, you have MSMEs who have been underrated by the Gem. They had been underrated prior onboarding, and plus they have their transactions on Gem. Yeah. Until unless you don't do transactions on Gem, you will be not, your invoices will not get discounted.
Our flow, right? There is no other data apart from GST and account
yes. Yes.
But we are still expecting and lenders to finish the transaction within 10 minutes.
So we can, and maybe I think Neeraj, you can drop a note.
Sure. I will
have a focused conversation on this one.
I think let's do that. Let's do that. I would like to move on to some other use cases. Insurance. I think Vikas, you are here.
Yeah.
Right. Any thoughts for you guys for how you look at the ONDC flow for insurance?
ONDC, we are starting up with 3 use cases: health, marine, and motor insurance. There, right? The fundamental model remains the same. It's an inquiry which is broadcasted to multiple insurers. The insurers get back with their offer. They'll need to capture a lot more customer details at different points in time. So that's obviously part of the design itself. There is a KYC, and then there is a payment that is done. The payment is collected by the insurer directly, not by the buyer app. So the insurer actually shares the payment link that is invoked by the buyer app, essentially. The payment is collected by the insurer, and after that, there is an in policy that is created and shared with the customer, and there's a validation done to the buyer app. That's like a straight-through flow. There could be elements, for example, there is a medical test in the case of health insurance where if you have a pre-existing disease that you have declared, right? So the insurer will ask you to do the medical test. That's handled on the protocol itself over there, right? The delay caused because of that there. So that all of those branches are also taken care as part of the the design for these 3 insurance products there.
Hey, so we've been actually listening a lot about alternate data underwriting. You also initially, when you started talking about like there would be alternate data that would be shared. So what is that again, a zero knowledge data that you would be sharing, or what is the kind of data that you would be sharing, or what would be a visibility an insurer would have? So we want to be a term insurance into a protection focused term insurance business only, which is actually not activated on ONDC yet. But what is the kind of data set? Because our initial thought is only to be on an alternate data set. We have an activity data, we have a buyer history, like right behavior. We were also working with one of the partners who's I think working with the ONDC to create again a zero knowledge kind of a database. Once he has bought something, maybe not insurance, maybe some medical product. So that would be all visible to an insurer that he's been buying a medical product. So I mean, we should be cautious about this. So what is the format of data set we get it, and how do an insurer see that?
Yeah, so I think are you like an underwriter insurer or more like an aggregator of sorts?
Will be an underwriter insurer. Will be a licensed authority.
Okay, got it. And then you will sell. I mean, your plan is to sell it directly to customers, or you're looking at sort of partnerships with.
I mean, the initial thought would be through partnerships, because that's how you start building trust and build scale.
Yeah.
But eventually there would be a D2C model as well. What GoDigit has, what Acco has, to buy directly from the platform.
Got it. And this alternate data essentially would be captured by either the buyer apps or maybe some other third-party sources there, right? Maybe a fitness tracker or whatever, right?
Correct. Fitness tracker. Correct. We also spoke to Samati on Saturday, who says the account aggregators and stuff. But that's a very interesting data set that we get. But I think on ONDC, it's a very, I mean, it's a huge data set, and maybe or irrelevant, but is it like you planning category of data? Like this is an A set of a customer, this is a B set of a customer. I mean,
ONDC doesn't have any data. Yeah. We don't have data because we don't have any platform there, right? So we are not really capturing data anyways there, right? What we will facilitate on ONDC are pipes, data sharing pipes. So I think as sort of Kapish alluded to, any platform has any proprietary data that the thing is valuable from an underwriting perspective. They can offer this data to a lender or an insurer or any underwriter for that matter over there, right? At the time of purchase of a product there. Now, how they do is via these standardized pipes. Think of it like an account aggregator framework, but abstracted out for any data, not just for financial data, but for any data. So that's what we intend to kind of build here.
Insurer, right? So insurer would not know what all data is present, right? So he might, it's for like a set of data set that we would need this. If it is available there, we take it from ONDC. If not available there, we take it from some other sources. Is it the case?
We haven't defined it, to be honest. I think that's something that's a problem statement that we would want to kind of design. And I think we'd love to kind of hear views, some community calls around this as well. So Vikas, if you could drop us a note on that there, we'll kind of include you in those conversations.
But yes, no, that would be very interesting. I'm guessing the way you would do that is would still follow all the norms laid by the latest data privacy bill. It'll have a consent manager. So you will define, like you will sort of have to define what a consent manager is for anything that's non-financial services data. Have an implementation of that either you provide or the TSP provides, and then that kind of gets adopted. Is that the idea there?
Yeah, I mean, I don't think it'll be ONDC providing in any case. It's gonna be either buyer apps, TSPs, or
how do you standardize the consent manager? Because that's what Sahamati does in the financial services space. How do you do that for this non-financial services data that's now coming in, but probably also will have to be regulated by the same privacy bill, right?
That's a problem statement at this point in time. Not defined as yet. Early stages of discussions, I'd say.
Fascinating. We'll definitely reach out. And
but I think that's an area where we've seen maximum interest in the market, rightly so. I think we sort of what we intend to do is standardize the rails there, not necessarily have the data provided there. That's
okay. Got it.
Understand. How can I monetize?
Very refined answers there. So it's like crawl, walk, run. So we are still crawling at this stage. You're asking us questions when running will happen, which shoes should I wear?
Yeah. Yeah, especially because this provides a way to differentiate massively, right? And obviously monetize the data there. So we do understand the interest from the market. Just very early days to this.
Sure thing, Mohit. Very interested in reach out and learn more of
Sure.
it. Thank you.
Just drop us a note. I think all of you are interested in specific topics. We'll be doing community calls, I think, hopefully starting October.
FS is still the best way to reach out.
Yeah, that's right.
This is quite interesting. You know, maybe tomorrow if Zerodha wants to come as a data pipe and share my portfolio, right? They might even want to monetize that data, let's say, until it comes on an account aggregator or something, right? And it can also help me in underwriting. You will know probably how much wealth I have there.
Correct. So it may just be like not really sharing your raw data, but sharing certain scores. So for example, Zerodha would have a score, like a trader score, or I don't know, activity score, something that like of that sort. And they share those scores. I think the key challenge over here is, are the lenders equipped enough to accept these standardized scores as part of their underwriting engine, underwriting model there? Yeah. I think that's where also I think we need to kind of work with the lenders. And it's going to be like a community thing. It's obviously ONDC is one part of the ecosystem, but I think a lot more market participants are going to be required there on this.
So, and will there be people, will there be like partners who are only there for, who have the data and only there for providing data for underwriting? I mean, they're not selling, they're not buying, doing anything. It's a data layer only, which is...
Bureaus is one, because they're there for that only, in a way, right?
Or third-party partners, any third party, like you mentioned, such as Zerodha, but Zerodha has a huge data like of how much trading he is doing. So maybe around that, something else.
That's like an FIP, like nothing different there, right? So you are an FIP, just there to provide data there, right?
Yeah.
Maybe tomorrow something like Google Health, it can help you underwrite as an insurer, right? How many steps I'm taking, what is, how active a user I am.
That's what we do.
True.
Correct.
I think the key question also we have there, I think yet to start conversation with lenders, is how well equipped are they to accept this data as part of their underwriting?
Yeah.
Because I'm sure there is a reason why this hasn't taken off as yet, right? Like
to Mohit's point, right? Yeah. So when we were talking with bureaus, right, to get this first to get to daily reporting, then to a real-time reporting, lenders or underwriting system is not ready to consume real-time reporting today. So they'll also have to tweak their underwriting models, right, in order to incorporate with that. Because especially in that invoice financing, when we are trying, sachetize those short tenure 7-day loans unsecured, how would it happen if bureau is not doing a daily reporting or real-time reporting? So even lenders will have to build that muscle, right, to come up and have that systems ready to kind of get this data and use that in their due diligence.
Correct. And I'm seeing a lot of fraud might happen, because as a buyer app, if I come and I get 5 offers and I'm a fraudster, I will honestly take all the 5 offers. That is what I'm there for. You're in fact making it easier for me. पहले क्या था, जाके मनी व्यू डाउनलोड करो, ये डाउनलोड करो, वो डाउनलोड करो. अब एक ही जगह मुझे पता है भाई 5 ऑफर्स हैं, पहले मैं एक लूंगा, फिर मैं दूसरा लूंगा, फिर मैं तीसरा लूंगा. There is anyways no real time reporting of the loan.
That's something.
But real time reporting will come very soon.
It's going to come very soon. Real time reporting. Absolutely. I think that's a very fair point. That can happen. I think that's something that we deliberated upon, and I think as a result of which there were conversations with the bureaus, all the bureaus, and there was an understanding that they will be starting real-time reporting, which will start fairly soon there.
Mohit, I have a question. If there is any non-compliance from the buyer app side, or if any fraud happens, or any tech issues happen with buyer app, where the data get leaked from buyer app or something happens, then is that is concern to you, or does it matter to you?
See, I think the broad guideline over there is going to be the law of the land, which is your, let's say, DPA bill. Now, from a data protection perspective, there's a bill that has been passed in the parliament, I think, in the initial phase, and it's going to be implemented, right? So that's going to be the broad law of the land. That will also be part of the ONDC policy from a data handling perspective. So obviously, if there's a violation, and then that's sort of going to be, I would say, covered under the broad law, DPA law itself. And I think that's the treatment, whatever is defined under the law is going to be part of it. Like what I'm hearing, and I think I haven't gone through the law, but what I'm hearing is that it's a fairly strong law, which even if there is it's like proven guilty unless there is an evidence otherwise. That's that kind of a framing of that particular law there, right? Which I believe is fairly strong, right? In the Indian context, especially, we haven't seen such kind of a law there, right? So I would expect that will sort of ensure that the participants obviously have strong systems in place, compliance, and then there is they sort of ensure that such things do not really happen.
Also, with the transaction happening, there's a transaction level contract that is getting executed between the buyer app and the seller app. And within that transaction level contract, there are some static terms and then some dynamic terms, right? So if there is some violation of those static terms, obviously it's a legally bound contract they're signing. So to Mohit's point, you're violating a legally signed agreement that is there. And then if you're doing some things which violates the policy, like network policy, right? You're just doing some sort of exclusivity, then we will have some kind of thing. But that's only to the network policy. If it goes beyond that, then it is just what happens, right? If you sign off on a legal agreement, don't do it, then it goes to the, you have courts and everything that is there.
So it's like somebody is just scraping data and then using it for, let's say, calling up people to cross-sell, all of that. I mean, obviously, that's going to be covered under the law, and that's going to be also covered under the policies as well.
Mohit, has any implementation gone live? Can we see it?
So, yeah.
We have gift cards live right now. That's fine.
Gift cards are live, but I think on the credit side, there are like at least 15 participants we can think of, which are fairly, they've started the process of integration. We do expect that by early November.
Which is the buyer app, or like how can I start my journey?
Cards is the buyer app, and the star is the seller app. For credit, the buyer apps that are right now the most advanced stages of integration are Tata Digital, India Lens, Easy Pay. Those three. Lender side would be DMI Finance, Tata Capital, Aditya Birla Capital, TVS Credit, Karnataka Bank. Right, Karnataka Bank is through a TSP basically. So those would be our first set of buyer and seller apps on credit. Hopefully, we're targeting it by November. We're able to get that first loan done. And FS is like less than 6 months old here right now within ONDC. Like Mohit joined 4 months back. I joined like 2 months back. So
I guess the team was set up exactly 6 months back.
Yeah,
in February this year, February, March this year.
Yeah. So and this other gift card thread which I set for the S Bank and Omni card that has gone live this month. So that's what we're targeting for this festive season.
So I'll put my question.
Yes.
On the mutual fund side, 2 questions. One is it already live?
No, not yet. The specs are not out as yet.
Okay. On the mutual fund side, I just opened the BRD that you were mentioning. I understand that the buyer app will be probably an investment advisor's app. Now, who is the seller's app? Is the mutual fund itself the seller app, or there's a separate mutual fund provider?
The seller app is going to be an aggregator, somebody like an MFU or a Camscavi, right? Where they sort of have aggregated multiple AMCs on a platform. They've done integrations there, right? So that's going to be the seller app.
So in financial services, right, barring gift cards, the seller app can only be a regulatory entity, right? So if you are doing lending, you have to be an RBI bank, licensed bank, NBFC, IIDA licensed for insurance, and SEBI licensed entity when it comes to mutual funds. So as he mentioned, like we are talking with MFU. MFU is owned by all the asset management companies of the country, right? So they have already tied up with all the 43 AMCs that are there. So once they come as a seller app, essentially all the asset management and all the mutual fund schemes get available on day one on the network.
Okay, so but MFU will be what kind of a regulatory body?
They are under
it's not a regulatory body.
It is under SEBI. Huh?
It is managed by it's under SEBI basically.
It is under SEBI registered as what?
It's a mutual fund aggregator.
I think only licensed. I'll tell you what.
That's an aggregator, mutual fund unit. There.
MFU India. If you go there, their website.
MFU India.
Yeah. Okay. Yeah. So it's a mutual fund industries shared services initiative formed by the asset management companies of SEBI registered mutual funds under the aegis of AMFI. mfuindia.com/corporate. You'll go. It will show you. In fact, this was one of the suggestions from the mutual fund industry itself.
Yeah.
You know, they have already done the hard work of integrating all the 40 AMCs together. So why are you making that effort altogether? Just go tie up with them.
So in case of, say, is there any plans to get stocks also here? If yes, then there who will be the buyer app and who will be the seller app? There's some slight confusion. I may be very.
Something that we'll probably get to. I think to start with, it was like mutual funds. I think we'll have to kind of maybe deliberate as we get there, right? On the stocks front, they could be aggregators or they could be direct sort of, I don't know, something like a BSC or an NSC, right? that from that perspective, right? We'll have a very good one.
Okay. All right. Thank you.
Cool. I think like almost through with time. See, Suchir hasn't.
Here.
I guess he's dropped. Oh, he's back now, right? Hey, Suchir.
So that's fine. Thanks a lot. Thanks a lot, Kapish. I think this was really great. The one good thing I see is that you have left people with a lot more questions than I think you have answered.
Yeah.
So
It's a good thing. It's a good thing.
But you know what will be great is if we can see a lot of them also participating when this protocol is being made or being decided.
Yes.
So I think a very good chance for all of you, to get into the stage. I mean, the time is yesterday, is what I can say. Yeah.
Absolutely. And I think, as you said rightly, like Suchir, the idea is to kind of get started and then form communities. And I think in ideal state, it could just be like people coming together, defining standard protocols, they're being rendered, and everybody using those there across industries over there, right? So we would definitely want to get to that, and we'll start community calls in some time now, right? On each of these tracks.
And I believe the communities are by like asset type, credit, investment, insurance, right?
Broadly, yes. To start with, there'll be like these three communities, and then over time, I do expect that there'll be some level of specialization. So within that, we could sort of try to bifurcate further.
So what we do is we do a open house session every Thursday, 12 to 1. It's free to join, where we present for 15-20 minutes and then take questions. And then we float our network participant profile, which is again on the same link that Mohit has shared. And people who send up interests are added tech implementation calls. And then how fast you develop depends on which cohort you go to, right? So you go to cohort 1, cohort 2, and if you're not doing as well as cohort 1, we will give you back to the general cohort also. So we try to this is the timelines you want to run with. So essentially, how fast tech resource decline.
Sounds great. I think we are also out of time. So thank you very much. This was really, really great, and we'll look forward to much more participation from everyone.
Oh, thank you. Our pleasure. I think great to be connected with all the folks here, right? Thanks, Suchir, for having us over.